Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Tina Teng on the 19th of May. She's the markets analyst at CMC Markets, coming out to us from Auckland, New Zealand. Now, Tina, welcome to the show.
Hi, Brian. Thanks for having me.
Now, Tina, before we get insights from you, let's take a look and see how markets have been performing. And we'll start with cryptocurrencies. Bitcoin is at 26,866. It's down 1.8%. Ethereum is at 1,803. It's down 1.24%. Now, looking across to regional equity markets, we start with the KLCI, where I'm at. The KLCI is down 0.05%. Shanghai is down 0.02%. The ASX All Ordinaries is up 0.65%. The Nikkei is up 0.74%. The Hang Seng is down 1.17%. The Kospi is up 0.74%. And the STI over in Singapore is up 0.41%. Now, Tina, your view on market performance in the first half of the day.
So overnight, Wall Street was very strong, led by the tech shares. Recently, the AI-powered tech rally really boosted the sentiment on Wall Street. This defended the pessimism around the U.S. debt talk ceiling. I think the first half of the day, Asian markets were not really reacting to Wall Street rally as Alibaba's shares slashed due to the disappointing earnings reports overnight. But I think the whole sentiment now around the globe, there's a divergent moves in the U.S. And China. U.S. markets also were very strong the last few days, and U.S. dollar strengthened because the Fed possibly will pause rate hikes. But on the other side, Chinese economic recovery is uneven, is still bumpy, dragging down the sentiment in the Asian markets. So I think that's just like two-sided stories around the globe.
Now, one of the big things is we're having the G7 happening in Japan now, and the big story around investment is the surge in equities in Japan. So we've hit the highest point since 1990, literally the height of the bubble economy way back in 1990. Tina, what's your view on this, and what's causing this Japanese market outperformance?
So first, I do think that very pro-growth BOJ's monetary policy, they insist on this ultra-loose monetary policy, which support this risk sentiment in the stock markets. And at the same time, I think the economic outlook actually has improved in the recent months, which just drive this funds investment from probably like US and European markets to Asian markets because they are like more like a policy supportive country with a more stable like a political environment.
Now, Tina, then, last question around currencies then. Obviously, how does this impact the yen and then also the US dollar and the yuan, given all the sentiments that's going around in markets, as you mentioned earlier?
So U.S. bond yields has climbed for 4 trading days in a row. That suggests that so the Fed could not start cutting rates this year, which lifted the rates markets in the U.S. So U.S. bond yields are very high. At the same time, the Bank of Japan insists on this ultra-loose monetary policy. Tends to weaken the yen, the local currency. The difference between the two central banks' policy stance so really drive this divergence moves in the US dollar and Japanese yen. So that's, I think, the reason behind is why the yen weakened so much. and at the same time, US dollar has gone very strong.
Now, Tina, as always, thank you very much for your insights. Thanks for coming on the show.
Thank you, Brian.
Now, we've been speaking to Tina Teng, markets analyst of CMC Markets, coming out to us from New Zealand on BizTech's Asian Midday Market Watch. This video will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.